Hey there, everyone. Happy Monday. It looks like the markets and the pre-market are trying to make it a very happy Monday. Please keep in mind this week has the labor market report. So if today is an astoundingly up day, then tomorrow by 10 a.m. when we have jolts, expect any amount of volatility to follow that. Also, we got to pay attention, especially to non-farm payrolls and unemployment rate that end the week. We are shaping up to have a September to remember, and let's dig into the charts and see what exactly is taking place right now. We'll come back to Big Bear AI stock in a moment. For right now, SPY, what's going on in the pre-market? Up at 665. So I talked about the fact that it was bullish, that we caught the 13-day support. And then the next day candle up here, I said that's a very bullish sign to see that happen, especially if it closed up above the 5. That was back on Friday. Here we are in the pre-market, about $3 to $4 up from where we were at before. So about 0.5%. When we look at the Qs, there's that same structure that we were talking about as well. And when we move over to IWM for the Russell 2000 small caps, these stocks are very, very hopeful that we get just as much nothing out of the labor market reports as we got from the inflation report from PCE on Friday. And I said, if we come in at expectation, it's something that's already priced in. The thing that holds the market back is that worry that something's worse. So if this week keeps on going, that jolts shows us nothing to worry about. ISM manufacturing shows us there's nothing to worry about. The non-farm payrolls shows us there's nothing to worry about. And then also that the unemployment rate shows us nothing to worry about. And I got to be careful with the phrase nothing to worry about. Comes in at expectation. In other words, nothing worse to worry about for right now. And that's what the market is caring about, especially as we end Q3 here, is the for right now sentiment. So we want to watch the revisions that we get, see that they're not signaling that, hey, we're already behind the ball, or the Fed is already behind the ball with those rate cuts, for example. And we also want to make sure that the labor market doesn't have the wheels falling off the wagon yet, because as soon as we get that first snapping sign of it, that's when we're going to get that catalyzing move to the south. Otherwise, the general direction is still up for now. So we went down below the 13 on IWM. We broke up above it, and then we were just shy. I think it was within 3 cents. It was 3 cents of closing above the 5 EMA for the daily chart for these Russell 2000 small cap ETF that we have here for IWM. So Bitcoin had a nice little recovery over the weekend. And so let me just show you a little bit of the structure that we have here. I talked about this 109,356 being a very key level for us, and that holding that as support could be very good. And then look what happened as soon as we made it over to this candle over here. What makes this candle so substantial, besides the fact that it's a nice green pickle that we have here, is the point where it moved up above this previous candle that we have here, and even better when we moved up above that one. So as soon as we got up above 110.5, that made it much easier to have that rise happening. What are we looking for from here for Bitcoin? Well, if you remember what I said about traveling on the way down here, I said watch for that rejection off the 50 EMA. And that's what we got, was that rejection off the 50 EMA. And now what we're looking for is we're looking to break up above and sit on top of the 13 EMA, because right now we're getting that rejection happening yesterday and today. We want to see that move up above that. So up above these peaks that we have here, there's a lot of resistance that happens around 112. We got to sit back up on top of the 50 eventually. And just as it's a bearish thing to have the 13 cross down over the 50, it is for the 5 as well. That is another bearish crossover. Going back the other way, the 5 over 13, good. The 13 back over the 50, absolutely astounding. That's what we want to see in the near term. The RSI for Bitcoin is still down below 50, which means still bearish. But the market is, and I'm going to say this square to your faces here, the market is still very hopeful. And, you know, you can use that word hopium if you want to. I don't really care for it that much. It is kind of fun from the punny side of me, the dad joke side of me. I do love me a good old dad joke. But in any case, the market is moving on hope right now. They're hoping that things either come in as expected or better. That's 2 out of 3, and that ain't bad, says Meatloaf, or at least said Meatloaf. May he rest in peace. So if the market doesn't come in at expectation, but instead, or beating it, if instead it comes in at something that is undesirably beating expectations, so something negative, the wheels do fall off the wagon, that's where we might see things tumble and crumble a little bit for things like Bitcoin, SPY, Qs. It could be a lot of it if it's really far off. Like if we see that the wheels have completely fallen off the wagon, the Fed got behind, that would be a very jarring thing, and that could have us looking for, okay, where do we find those major supports? Until we have that sort of report, there's not a lot of sense in looking for it, because the general direction is still up from now. All right, into Big Bear AI stock. I talked about this, I believe, on Friday, talking about this consolidation, this massive one that we see going back to February and then into April. of 2025 all the way up until present day, and the market's looking for a really good reason to either break out of this consolidation to the north, which could send us easily off to that 2-digit price tag of $10 plus, or if we're going to find ourselves back down below this thing, which would be pretty darn painful, and will we finally see this thing move back under $4? Well, I'm pretty hopeful right now. The RSI is still 57 on the daily chart, so that's bullish. And then the momentum, the RSI that we have is about 57 again for the weekly. And on the monthly, happens to be at about 61. And what else do we have in terms of moving averages? Well, let's take that on down. And I talked about the support off the 13, which could be very big for us. So far, we're getting a small bounce and that we're getting a slight move up above. The market's still going to look for permission. It might be a little bit of a struggle for right now. We are really looking to see us go back up above this previous candle, especially because it's above the 5 EMA. It'd be even better to make it above that 737. If I put the technicals up here for a moment, there we go. And let's bring back some of our fib retracements on this, some of our pivots, our fib extensions. There we go. You can start to see what we're up against here. We have this support down at the bottom, but up above this 717 to 735. That's where that real resistance comes in, and it gets troublesome for us. You can see that the last time that we tried to make it back up over those, we couldn't. It took a lot of momentum to push us up over, but then easily falling back through. So now we need to see sitting on top of 735 is super, super critical, and we want to see us get back up there. The trouble starts around $7.17, which is where we start to hit that resistance. For NVTS, let me take down the technicals for a moment because I talked about the support on the 50, and you guys can see the long wicks of that buying pressure that we have. I said both of these are very good things. And now look in the pre-market, up about 20 cents from where we closed, at least as I've recorded this video, from where we closed on Friday. That would put us up above the 5 EMA. This could be a very good day for NVTS, for Navitas Semiconductor. So be on the lookout for that one, up about 3% in the pre-market as I recorded. Long bottom wicks here. And like I said, holding on to that 50, which is, I said, watch for that bounce there. Furthermore, when I bring the technicals back, you guys can see the support area that has been generated down here, and the fact that we were able to, even though we poked down through it a little bit, we were still able to close up above it these previous 2 trading days, Thursday and Friday, and that's a very good thing. So let's go with RZLV, just to toss in Rezolve AI to see how things are going here. We closed down below 620. That's going to be a little bit of trouble for us. Watch for us to get back down into this sweet spot of 545 to 563. If we end up back in there, that could be a very good thing. Also, watch for this 13 EMA. If we come back up and retest and get rejected, that could send us down. We need to make it back up on top of those moving averages that we have here. Now, mind you, I want to take down the candles for a moment because I want to show you what a bearish crossover would look like. Right now, we have the 5 closing down on the 13. The fast going down over the slow is a bearish crossover. If we see that happen, that is a further bearish sign for RZLV. But I will say, in terms of LV, I would absolutely love, that was horrible. I would love to see this thing come all the way back down to the 50 to take a really good rip of a bounce back up the other way. Especially, check out all the support that happens down in this area. It just starts to become such a tangle, such a cluster of different lines that we have in terms of the different Fibonacci retracements that are out there, that between the 50 and the 200, which happens just south of $4, all the way into the high 4s, that's a tough thing to fall down through. So even if we do end up getting pushed down on this thing, as long as no bad news comes out for it, and there are earnings coming up, by the way, those earnings coming up on, looks like, the October the 1st in the morning, so AM. So that means that Tuesday, if there's going to be some sort of options play and people are going to play those, which now, mind you, it's called an earnings risk for a reason, because it is a coin flip anytime that you get close to earnings. This could be one that as we get close to that, we either see that accumulation back up to the upside and that price appreciation, or maybe we see some of that worry come into it and pull us down, which could increase the likelihood that we get that snap back upward. Everybody can do their own thing. We'll see how cheap the options are. They're usually more expensive when there's more implied volatility going on, especially around an event like earnings or something. It's usually not very cheap to buy the different call options, put options, you name it. Usually makes for more of a seller's market, which and there's different plays that you could do with that. But that is something that I'm watching for RZLV, and those earnings like coming up. I guess it's this week, isn't it? That Wednesday, October the 1st. Oh man, the time just really does keep on creeping on. So guys, come on over and chat with me and the other panel experts over at the Discord. See the live trading that's over there, the entire ecosystem that's built around serving you and supporting you in your journey towards financial freedom, building alpha in your portfolio. Thank you very much for watching. I am Dr. Stock, Doctor of Education. Remember, my friends, that learning is earning, and we'll see you in the next video.